Hi friends, welcome back. So question for you, is AI the future and will AI push the stock market higher? That's the subject of today's video. I want to share my thoughts and get yours as well. So headline, Jamie Dimon, so basically head of JP Morgan and the head of Wall Street is saying AI may be as impactful on humanity as the printing press, electricity, and computers. So basically he's saying this is the next biggest and greatest thing in human history. Elon Musk is also saying he predicts AI will overtake human intelligence next year. So these people are pushing you AI very heavily. Moreover, Wells Fargo is now jumping on the AI bandwagon. They're pushing their S&P 500 target, the highest on Wall Street. You can see 55, 35 is what they predict. Moreover, their language, honestly, guys, it sounds like language of hype. And I'll show you guys what I mean by this. This is Wells Fargo. There's a quote, the head of investment. They say here, the bull market, AI secular growth story, and index concentration have shifted investors' attention away, from traditional relative valuation measures and toward longer-term growth and discounting metrics. So if you understand the language of here, this is the language of hype. Basically, they're saying, hey guys, forget about traditional ways that you think about money. Forget about traditional ways that you value companies, etc. Think about the future, long-term growth, right? Think about the future. And when people say that kind of stuff, like, hey, the ways that you normally think about money and how you value companies just doesn't apply because this thing is so awesome. Moreover, this is a quote from JP Morgan, essentially Jamie Dimon. They say here, while we do not know the full effect or precise rate at which AI will change our business or how it will affect society at large, we are completely convinced the consequences will be extraordinary. So when you think about these and you put this stuff together, they're saying, hey, forget about traditional ways that you value companies and money, because just think about the future. And he's like, well, we don't know exactly how these things are going to, change things, but we do know it's going to be awesome. And that's just sort of, it's just, I feel like we've seen this stuff before, be it the EV stuff, be it the crypto stuff. It just feels like bubblicious talk to me. So that's my opinion on these things. And I want to hear your thoughts also as well. Moreover, when they talked about him, also this is Jamie Dimon, they said, hey, I think rates could stay higher. I've mentioned that stuff for a long time. Wall Street really wanted 3 cuts. Actually, they wanted more than that. And then the talk is shifting. Well, maybe it's 2. And so now Jamie Dimon's like, oh, maybe it is going to stay higher. And I've been saying all along, there's a high chance they don't do anything at all. In terms of what the market, and they meaning the Fed, the terms of what the market's up to today. So Microsoft, Apple, Nvidia were down. Tesla had a good day today, actually. Mostly because Elon Musk tweeted out that, hey, robots, AI, it's all coming, guys. I'll see you in August. Made a separate video on that, but this is what are moving our markets. And it also, too, if you want to take a look at this stuff, and guys, I try to show you as much as I can, do track the treasury yields. So the 10 years at 4.43, it's been going up lately, and the 2 years at 4.8, so we are still inverted there. If you want to take a look at what's going on, sectors today, consumer discretionary was the big winner at up 0.94, and then energy was down today. Moreover, I want to talk about this, guys. I try to show you everything that I possibly can. This is Tesla. I believe that the bubble has popped. Does it have further more to go down? I do believe so, but we'll see. This is where it is right now. So I want you to understand this so you can see it for yourself, right? So this is the run up. Remember, EVs, electric vehicles were all the thing. We're all going to buy them, etc. So the bubble has popped. How much further will it go? Well, we'll see. Moreover, I actually lived through this stuff in the dot-com bubble. You guys may or may not know. I am 49, just about almost to the 50 mark here. And I lived through the 2000 bubble. I totally remember this stuff. I lived through the great financial crisis as well. But this was Intel. This was the hot company. And Intel's a real company. They make real products. I've had several Intel inside my computers for years, right? However, it doesn't necessarily mean that you pay any price for it. A simple example is, hey guys, I really, enjoy my, for example, to say, I enjoy my camera. I like cameras, right? But it doesn't mean I want to pay $40,000 for a camera, right? I'm fine with $1,000, something like that, just for example. Or, hey, I really like that new car. Maybe I want to pay 40 or 50 for it, right? But I don't want to pay $400,000 for said car, right? So the point I'm trying to make is that a product can be good, but doesn't necessarily mean you want to overpay for something the same way you may like a house. Like, hey, I really like that house, but I don't necessarily want to pay $10 million for it. I'm fine paying $1 million. that kind of thought. So what happened with Intel is, everyone said it was going to be the future, so they weren't wrong. It was the future at that time, but it wasn't necessarily at the price at the right in terms of stock. So you can see here that the stock is actually still below its all-time high. And the question is, the interesting question here is like, look at something like NVIDIA. And guys, if you got NVIDIA early, you've done absolutely fantastic. I think we can all read the charts. And so I never like say, hey, you can't make money in this stuff. I just want to say, hey, I mean, how much more do you expect this thing to go? is that what you expect? I mean, is this what everyone's expecting on NVIDIA? Is this going to keep doing that? I mean, is that realistic? For me, it's like, I feel like we're kind of closer to the, this part of NVIDIA where we saw what happened with Tesla, but it depends what you think. There's two choices. Is it going to go like straight up or is it going to go down, right? And I want to show you an example, guys, of what happens to some companies, the hype. Now, this is Fisker. This was part of the EV, craze, electric vehicles. You can see what happened there. If you watch all the pumper channels, they basically forget about this kind of stuff. They forget about, your Fiskers. They forget about your Intels. They just talk about, NVIDIA is going to be awesome. And then we're kind of shifting away from Tesla making cars, and now they're all talking about AI and robots all the time, right? So be careful out there. And moreover, when you talk about something like a Fisker, this was the news today. They're even canceling people's orders. I don't even know like what people think about this. If you order one of these things and like they say, hey, 40,000 of you, forget it. And sort of why I try to show you guys different things. Like, for example, I know that in social media, Coca-Cola is not exciting. I get that. I totally get it. It's not exciting. But at least this is like a fairly healthy chart, right? It grows. Even if the stock doesn't appreciate that much, I'm just saying, for example, you're still going to get a dividend of 3.27%. What other, because sometimes people say you hate tech, whatever. Well, Microsoft's an interesting one. Yes, the stock is going up, doing kind of NVIDIA kind of thing, not to the same rate of like, like that kind of thing. It's not like that necessarily. Not the same way, but the difference between like Microsoft and say like NVIDIA, and this is sort of the question, so I pose it to you guys, is the thing that these companies have to convince you is, are you going to give them recurring revenue? For me, Microsoft has always been different than Apple because yes, I do have iPhones. I talked about this several times, so I like iPhone, but I don't want to necessarily buy a new iPhone every single year. Whereas your Microsoft, if they can, convince you to essentially, if you're a company, buy into their Microsoft Teams and all their cloud service, et cetera, and essentially have that recurring revenue, and essentially you're partner with them, and you're kind of locked into their ecosystem to keep giving them money. That'll drive profits the same way as something like a Coca-Cola, say, in the restaurant business. So, what is Microsoft in a bubble? It certainly could be as well, because it is part of the AI stuff, but it is diversified enough to where they still have different monies coming in. Speaking of diversification and sort of why, don't necessarily throw all your eggs into one basket. This is why I show you guys different kinds of things, right? I say, hey, look at the S&P, look at the NASDAQ, small cap, mid cap, micro, etc. If you, because sometimes people say, hey, Chris, what's the safest thing, or what do you suggest? If you just buy S&P 500 stuff, that's essentially the easiest decision that you can make in terms of like if you just want to go into an index fund. The reason why is like at any given year, maybe one year it's going to be real estate, next year it's going to be AI, for example. Maybe another year after that it's going to go into clothing or whatever, right? The things may shift around. Maybe it'll be energy one year, and so essentially when you're just buying the total index, if one sector is up one year, maybe the other sector's down, but it all levels out in the end. In terms of the sort of AI bubble and the robotic stuff, I want to share a story with you guys that really I think is interesting and people don't talk about enough is Boston Dynamics. So this is a legitimate company. They make products that work, but they're losing money. And there's an article that came out today, actually here in Korea. I don't know if it's big news in USA, probably not, but I do think it's worth mentioning because it's something that when people tell you all the time, forget about traditional ways of valuing money or companies, just think about the future, bro. I want you to just pose these questions to you and show you guys some things. So first is Boston Dynamics, again, is a legitimate company. Google put money into it. Then you had SoftBank. And then in fact, Hyundai, which is a Korean company, I guess they have 80% of this thing now. One of the deals that they made is that they, SoftBank still has money in as well, is that they're either going to take the company public or buy their share from SoftBank. I think that's part of the deal. So then Hyundai then would end up owning most of this thing, if not all. They actually came out and saying, hey, we got this robot dog thing. It's going to be awesome. And here's the thing this is the quote here. It says, robots are getting closer to humans, just like you are carrying your phone today. In the future, people will carry a spot one day, and this is sort of referring to their dog. If you look at the robot dog does, but if you look at the headline though, it says Hyundai's motor bet on robot dog befalls murky outlook. Why? Because they're losing money. And this is the interesting thing is evidently, according to Boston Dynamics, they were saying here that there's only 1,000 spots, I guess, that they've sold in 35 countries, right? So they, some people do buy these things, but just not that many. The price for spot is $75,000. It's just high. It's just too high. And the question is like, how much of a market is for these kind of things, and when will they bring said thing down? I mentioned this stuff because they're also losing money. It says here, so again, it's a legitimate company, but they're losing money. According to the business reports of Hyundai Motor, Hyundai Mobis, Hyundai Globus, Friday, Boston Dynamics turned a net loss of, see this in Korean, so it would be 248 million last year, so losing like 250 million a year. And then I think this has been going on a couple of years now. It says net losses in 2022 is 255, and then 2021 197 million. So they're losing. And what ends up happening is that these kind of companies that are losing money, they'll come out, and because there's a possibility they'll go IPO. There's a possibility of that, and that'll be an exciting one, an interesting one. We'll see how they hype it up. But they say, hey, we're losing money. Yes, you can see it in our numbers, but if you give us a bunch of money, we're going to be profitable in the future. And that's ultimately the question you have to make as an investor. Is that true? Do you think we're all going to be buying these things? For me right now, the cost, and I don't know the cost of the walking one, but I don't think it's going to be cheaper than the dog. Because like, for example, and again, you can watch their videos, and it is impressive technology, but I just want to, put some realistic, talk in this kind of stuff. Because remember, Wells Fargo wants you to abandon any kind of, traditional ways of valuing this kind of stuff, and just, it's the future, bro. And that's essentially what most of YouTube tells you. It's the future, bro. You just don't understand money. So the tech looks like it works, but is it going to be a cost effective to replace a human in a factory with something like this? I think for some applications, so for example, the dog with the robot detecting kind of, the bomb detecting kind of stuff, I think that is a real application. And how many people are going to buy these things? Maybe police departments or maybe military, these kind of things. But I don't know about like your regular person needs a bomb detecting robot, right? Also, too, remember there's 75,000. The other thing too, when I'm talking about this kind of stuff, and again, I actually do like text. The thing that frustrates me about YouTube is when I try to just talk about just business logic, reason, this kind of stuff. People are like, oh, Chris, you don't care about the future. And it's like, what are you talking about? I just want to be realistic about this stuff. Is that when people try to sell you a humanoid robot, this kind of thing, walking around, this may actually end up being more realistic, like a robot on wheels that can move around a factory much faster, if indeed you're going to have a robot. And it may not even be like this shape. It may just be like basically like an arm, and that they can have wheels, like 4 wheels, an arm, or even 3 wheels might be cheaper and more efficient than 4, right? The point is though is that do be leery about any of these kind of things, that when people promise you you're all going to be making money. Again, Boston Dynamics is losing money at the moment and hasn't sold that many of these things. Other things that are going around the market as well is that sometimes governments will actually pump up said industry or company if they think it's important to their national security, or just important to their local jobs and industry. Yellen was in there. She went over to China and she's basically saying, hey, are you guys, the government that is, are you guys pumping up your electric vehicle car companies? And China's like, no, we don't do that. We're just really innovative. I'll just say, I wouldn't doubt if the Chinese government is heavily subsidizing the Chinese car industry. I wouldn't doubt it. In truth, the Americans are also subsidizing the U.S. car industry, right, with this EV tax credit stuff. So governments do help out companies in that sort of regard. And so when you remove your taxpayer dollars from said companies, things change quite a bit. And what's kind of ironic about this stuff is like Yellen saying, if you don't, if you stop supporting, if Yellen's like warning China, if you keep supporting your companies, we're going to start taxing you, tariffs more. And what's kind of ironic about this stuff is, in fact, there was an announcement just today. I guess we're giving 6.6 billion more, and maybe it's 11.6 billion total to Taiwan Semi. They were building 2 plants in Arizona, so I guess now there's a 3rd going in Arizona. So definitely there's money in chips. So guys, I track all this stuff with you. I don't want to think, again, I just don't want to think I hate tech or anything like that. I'm just being realistic about this stuff. This is real too. If you get money from the government, you're going to be okay. It's like guaranteed money coming in. Other thing that's going on in the market today, which is kind of interesting, Blackstone, they're getting into apartments. Was it $10 billion multifamily? And so then the apartment stocks were jumping up. And this was kind of an interesting one because I was thinking about this. Is maybe this is something that we've been talking about quite a bit, is USA really is heading into a nation of renters. At least Blackstone seems to think so. So that's been the other big news today. Other stuff going on in the market, guys, because kind of the thing I want you to be thinking about is, let's say you do believe in the hype and you think I'm crazy and this is not the top of the AI hype bubble. This is going to keep going higher from here. I'm fine. You have a right to believe whatever you want and put your money wherever you want. I would just say, as just a good rule of thumb, don't put all your eggs in one basket. And also to understand how the market moves. So for example, I don't talk or make videos about Israel and the Palestinians in Gaza all the time, but I guess I've been seeing the headlines. The USA is really pushing on Israel to pull out of Gaza. And the headline here was Palestinians return to destroyed homes in Khan Yunis after Israel withdrawal. So hopefully we can get a drawdown there. And in fact, then the Israel stocks were moving up today. This is a chart of, actually I have this one sorted as year to date, where Turkey's the leader, but I think today Israel stocks were up like 4% or something like that. Point being, as I'm trying to say, is that it's not just AI that you should track. You should track all kinds of things, bonds, different industries, and also too what's going on in around the world. So anyway, that's the subject of today's video, was AI. I shared my thoughts. For me, I think it's hype and the bubble. That's just my opinion on these things. Love to hear yours as well. And what do you think? Do you think Wells Fargo is right? Should we forget about traditional ways? As they say, the quote here, traditional relative value measures, you should forget about that and just think about the future. Is that the way we should go? Anyway, appreciate your time, everyone, and I'll catch you next video.